Crypto Instincts, here to give you everything you need to know to succeed in the world of crypto investing. I will show you unique tips and tricks to make your life easier. We'll keep things simple with a focus on the big picture along with the key factors that really drive the market. I prefer combining fundamentals, technical analysis or TA, along with a keen instinct to gauge all the different hype factors that really drive the market. These instincts we really all have from our experiences in all different walks of life. But this is one of my passions. I put endless hours of research following the different updates from different aspects of the market, which I will try and condense into key points to focus on. I want to provide you with all the tools, resources, knowledge, and skills needed in order to feel confident navigating through this market, confident in your research and making your own decisions. Also give you a heads up and warning for common pitfalls to avoid, and of course the best tips that I can to help you maximize profit in this market. This is whether you are a hodler or a trader. I will try to have all the bases covered. Where to start? When should I get in? What's the best point of entry to the market? Before you invest, it's always important to understand where you are in relation to the market cycle. Have a good understanding, a good feel for the overall market psychology. I will give you the knowledge and tips on how to figure all this out. Regardless of when you're watching this video, it could be months or years from now, you can use this to gauge where you are in the current cycle. There has been some fun and interesting discussions about where we are in the adoption cycle for cryptocurrency and blockchain technology. Most analysts would agree that we are still in the very early stages, varying from 0.5% to 5% of population that owns any crypto. I like to keep up to date research and read up on articles to keep tabs on the world of crypto, but sometimes the best way to gauge it is from life itself. What I mean by that is just people around you, people you work with, family and friends, how many actually invest in crypto, how many know other than Bitcoin and maybe blockchain. So this is a very good way of gauging it. And I will entertain both sides of the idea, just for overall consideration and to cover all bases. So the more obvious upside to investing as an early adopter to any new booming technology is pretty easy to understand. Just a quick reference to, say, Apple or Amazon. If you have invested back in the late 90s up until today, the growth from it would be pretty easy to see the potential of this upside. Now, if we are to consider the other side as well, there are many well-respected crypto analysts that say we could be hitting a chasm, or we may be in a chasm because we're currently in a bear market. The current time I'm making this video, but depending on what time you're watching this, it could be different. So this chasm that they're referring to is a point in time when the technology is so new and the government and regulations don't quite know where to put it into the current box that we live in. So the adoption to the mainstream public is slowed down due to the lack of bridge. Now, plus cryptocurrency movement, I say movement, it isn't something that most governments will want to welcome with open arms. But most do realize that they have to do this in order to keep the talent in their country and at least make some profit from taxing these companies. So my argument from looking at this, from my perspective, is that we have likely gone past the chasm phase of the early adoption phase, adoption cycle, back in 2014 and 2016. This is right after the Mt. Gox hack, when it was the main crypto exchange back in those times. Most of the crypto investors were trading on this platform and it got hacked, and a lot of people lost their money. People just lost faith. There was very little technology advancement back in those couple of years. This is before Ethereum and the smart contracts came into play. So it was almost quite an ugly scene for a long multi-year run of either a down market, bear market, or just sideways hovering market where nothing was really happening. So this is what I feel the chasm would have been already. It was a good 2-year run when Bitcoin was going up. And I'll show you this later as we get into this. I'll show you some of the history charts. So I want to leave this information and data in your hands. You can come to your own conclusions about the different possibilities. There are many different opinions on this, and I can't say anyone knows for sure. But to give you an idea of why I feel the chasm phase has already passed, and why there are some pretty exciting times ahead, as I touched on earlier, that we are probably around 5% or less, most likely less, of the population that actually own or are involved in crypto in any form. There's still many out there that call cryptocurrency a bubble. And for me, it's kind of hard to call anything a bubble when you're looking at less than 5% of ownership. So, there's that to keep in mind. It might be more skepticism from some people, and that's understandable because this is a very new technology. We've seen the same type of skepticism when it comes to how the internet was going to work and how people were going to use computers and how Facebook was going to make money when they didn't charge anything. So there were many different ways of being skeptical of a new technology, but to call it a bubble when it's less than 5% ownership, and it's kind of hard to see that. From my perspective, this is just early stages in a market when there's relatively low volume. When there's low volume, you see higher swings in price action. So that's probably more likely of what's actually happening to the volatility for it to be called a bubble. A little bit of misconception maybe, but then again, this is just my opinion. And I know this is just another article that I found was very well researched. It goes into an analysis of how many different wallets are out there and how you can't really think of one person equals one wallet just because a person can have multiple wallets, can have multiple exchanges. So this is a pretty long but very well broken down article of how he comes to his conclusion of we are very early in the stages of ownership. So just some things to keep in mind, and how I came about my conclusions, or not conclusions, but my thoughts of where we are in the overall grand scheme of things. A couple of other things to keep in mind why I mentioned I think the chasm phase is likely over is because this is very hard to compare 2014 and 2016 up until now, where you see companies like this, Long Island iced tea, that has nothing to do with blockchain, yet somehow changes its name and winds up boosting its stock up how many times? This was late December of 2017. And Kodak follows suit and does something very similar. So this is just something that we were not seeing back in 2014, 2015. These companies are all trying to get a piece of the pie because they know that there's hype behind it. And when there's hype behind it, like I said, if you try to gauge real life again, just understand and get a feel for how many people are probably interested but are waiting on the sidelines because they're still transitioning from the skepticism to the excitement phase. So there are a great number of people that I know that are waiting to get in, but they're trying to educate themselves, trying to understand the market and the technology better before they make that investment. So when you take all these things into consideration, it makes it, at least to me, a little bit clearer that it's probably not going to be another 2-year dead period where nothing is happening, where no technology advancement is happening, especially considering the smart contracts that is now available from the many different platforms, not just Ethereum anymore. So that's definitely something very important to keep in mind. Then you have to remember of all these different investment vehicles that the traditional markets are trying to create for Bitcoin, like the Bitcoin futures that you guys have probably heard of back in December. This is one of the main reasons, or many believe to be one of the main culprits of why there was such a big price pump late December 17, is because the crypto market has gotten its first taste of adoption, in a sense where, hey, look, the traditional markets are beginning to recognize us as a real thing. They're putting in investment vehicles so that the average traditional investor can get access to trading, and this is another way for them to make money, obviously, so that way they're getting a piece of the pie as well. So when you start seeing traditional markets creating things like Bitcoin futures and crypto index funds, when you see governments like Venezuela launching their own state-owned cryptocurrency, and then you see governments like Japan that is fully embracing crypto and the technology, trying to bring talent there and trying to empower the movement as far as the technology goes, and trying to help their own country in the current the economic affairs over there. And of course, the main thing that got me excited and makes me feel this has become more legitimized is when the bill passed in Arizona, in the States, where now cryptocurrency and Bitcoin, at least, and probably a couple of major coins that's being recognizable right now, they're being accepted to pay for taxes. So that's huge. That's a way of government, even if they're not going to come out clearly say it. This is definitely a way of them, taking a step towards accepting cryptocurrency as a real technology, as something here to stay, as something that they have to recognize. So all of these things are why I'm pretty bullish on cryptocurrency overall. And this is not something that I'm not saying all these things to get you hyped. This is just how I am coming to my own decisions. This is just some of the information I'm basing it on. If you come across more that might be more bearish or different, I would love to hear it, because I like to take in all different information, try to analyze it, and then make the best decision I can from that. So this is just a way for me to provide more data for you to think about as you go through your own decision-making process. Again, depending on when you are watching this video, we could be well on our way into the adoption curve. So looking at this video in the future, or whenever you're looking at this, I could wind up sounding quite smart with my predictions. But at the same time, if you are already well into the adoption cycle when you're watching this video, you will have to consider and implement different strategies for that phase. I will go over the different ways you can go about this in further videos into the series. And if you want to find any of the articles that I mentioned earlier, I put all the links in the description below, so you don't have to go dig for them. With a big picture understanding of where we are in the long-term view from the new tech adoption cycle, we can now take a look at the more traditional way of looking at it, which is the market psychology of almost any market, not just crypto. This is probably something Wall Street knows like the back of their hand, but it's a good visual understanding of the different emotions that we all may feel during the ups and downs of any market cycle. It's just a good reminder to understand the feelings and emotions you go through, anybody can go through. And if we were to replace the words, this is one example of it, right? This is another one that you might see if you do any further research. You probably come across one of these charts. And if you replace just the words that you see here with the crypto analogies, when you are actually doing your research, what it might actually be like, what it actually might feel like and sound like. When we're in a bull market, you will probably see everyone claiming to be the best trader in the world. Any advice and tip that they recommend will probably be the next big thing, or get you a big gain. And for the most times, that's true, because everyone is a genius in a bull market. You can't really lose. You can only maybe differentiate from the bigger wins compared to the smaller wins, but you're winning nonetheless. So when you will see all different types of hype articles, coin recommendation videos, traders that's going to try to sell you on their alert systems because they're winning all the time. So this is when you know you're probably near the top of the curve here. And you will, once we get to the bull trap, so that's usually when you get your first dip and people are basically at this time actually looking at this as a profit, meaning they're looking at this, oh, I'm gonna get it at a discount, even though we were on this huge bull run. Now that it finally dipped down, now I can reload and buy a lot at a discount. Usually, this is called a bull trap because you're buying in thinking it's gonna go back up, and it does for a few days, and it's gonna drop a lot further. And the people who bought the bull trap is gonna be in for a hurting. So this is a common rookie mistake, or I wouldn't even say rookie, because a lot of people that's been in the market for a long time, for many years, can still get caught up in this if you're not careful. I will go into more of ways to be on the lookout for this when we get further into technical analysis. But for now, when we're staying on the big picture, this is just something to remember. And as we go down into the bull market, you will probably see and hear people talk about, oh, this is over, and all the reasons, all the different FUD articles, FUD meaning fear, uncertainty, and doubt. Different governments might be coming out with new regulations, some exchanges having problems, how just anything that you can think of negative will come out around that time. And remember, one of the reasonings of this is that major media outlets and any smart media outlets are very considerate of their clicks, meaning if they post FUD articles, like bad articles, nasty articles, during times of hype, during price action of bull markets, nobody's going to read it, and people are going to think they're crazy. But when they post these articles during price drops and during bear markets, people are generally searching for answers. They're typing into Google, what is going on with crypto? Why is it happening? Like, so you're going to get more of these searches, and that's when you generate the most clicks. So having that kind of understanding of how media works and the timing of these articles can make a big difference in your own mental psychology and how you feel as a person. Just sometimes hey, these are all coming out at the same time for a reason. It's because they need the clicks. This is how they live. So that's what I mean by understanding market psychology can save you a lot of grief, can save you a lot of emotional burden. When the prices are going down, you don't have to panic, because it's part of a natural cycle of how people and traders need to have these cycles to make money. So having this understanding can help you a lot. So when people begin to question themselves, blaming themselves if that they have bought at the wrong time, or maybe they just they bought at the high or at the bear trap, this is when the weaker hands will begin to give up and sell at losses, just to get rid of that gut-wrenching feeling that out of their system. Sometimes that's pretty natural, and it happens. But this is how you actually lose a lot of your money, and that's not something I would ever suggest. That's why I'm making an emphasis on this point, to mentally prepare you to understand that we're going to go through probably 2 or 3 of these cycles a year. I mean, I wouldn't say 2 or 3 to be exact, but consider it this way. In a traditional market of stocks or most commodities, we don't see swings like this for multiple years, maybe 5 to 7 years, 7 to 10 years. In the world of crypto, we might see one of these every year, sometimes 2 or 3 a year. You can't really call it on an exact number because every year can vary, but just mentally prepare yourself to see this and be ready for this at least once a year, if not more. So this is a huge emphasis that I want you to take away, to be mentally prepared. When you see a price dump, and if you're not ready for it, you weren't prepared for it, don't go selling off in a panic thinking the market's dead. Gather your information, calm yourself first, make sure you do your due diligence before you make any rash decisions. It's going to save you a lot of heartache, and it's going to save you a lot of money. So that's something I'm going to be stressing a lot, and we're going to go through many different tips on how to prepare yourself and how to even profit from this. If you want to get really advanced, there's ways that you can profit in a down market, which sounds risky, but like I said, once you get a better understanding, and for somebody that might want to take on a little bit of extra risk, to profit even during a down market, it is very possible. So we'll get into that in the later videos and articles. For right now, just want you to make sure you understand that anytime that there's going to be weekends, as traders will call it, weekends that sell off around the fear, capitulation, despair parts of the cycle, there's going to be smart money waiting to buy at those prices and riding the prices back up. That's just how the market works. That's how people profit. That's how traders profit. And Bitcoin is what most people call the trader's dream playground. It's because of the volatility that we have in here. The price action going up and down in pretty big swings. And those swings are what makes it possible for traders to make profit. And in the traditional stock market, we see 3 to 5% gains, and that's pretty high on a daily trader, like a day trader's measurements. We can have 10 to 20%, even 50% swings on a day or 2 days for day traders to make huge profits. So without getting too deep into that, it's just something for you to be aware of, that this market is made up of a lot of hype still. So there's going to be fundamentals, technicals, and hype that drives it. And regardless of which one you're going to be more focused on, which one is more of your strong suit, always remember that when you run into these cycles, it's not to panic, it's to understand it first of all. And when you understand something and you can come to kind of expect it, it's not going to throw you off course. So this is why I'm stressing it so much right here. So here's the home base. This is coinmarketcap.com, something that you're going to want to bookmark. This is the place to come and check for the prices, and it's pretty much where you can look at all the different projects, and all the different research can be pretty much done right here. I'm going to be sharing with a lot of different tools and resources you can use as we go, but this is where we start in the beginning. This is a way for you to get a practical look at how you can research into some of the different coins, especially Bitcoin, because all the prices are going to follow, especially right now. This is going to change in the future probably, but for the next little while, Bitcoin is going to determine everything. So when you come into the price history, you open up the coin and it'll give you a chart. This chart's pretty simple. It doesn't take much technical analysis to read trends. One point to pay attention to is that when you're looking at all, it's the big picture from beginning to end that it's ever been on this website for different coins, because different coins might have been created at different times, but show up on this website is when it starts getting tracked. So there's the year to day, 1 year, which will shorten the window, and then there's the 3 months, the 1 month, right? So this is where you can toggle it and look at it differently. To show you what I was looking at earlier is if you put into a shorter window and just move along this line right here, all those small blips you saw earlier are actually big price movements. So if you consider and put yourself in the shoes of an early investor, and to share with you a personal story, this is when one of my friends started mining Bitcoin and started telling me about the different things that he's doing, and I was just living vicariously through him mining. To be honest, I was skeptical at the time. I didn't know what to make of it. I was very interested. I was fascinated with him mining the altcoins because they were cheaper and more efficient and ran into less difficulty levels compared to mining Bitcoin. How much electricity worked out to how much Bitcoin you can mine per day or per month to see how it's a profit. That the point of residual income in itself just attracted me. And but to build along to that, as I dug into the technology behind it, the movement behind it after reading the white paper, it was inspiring. It just kind of it aligns with what I wanted to see the future. So this was it was a blessing for me to find it. But see, I'm bringing this up because I didn't get in at the time. I was just keeping tabs with my friend that was mining. This thing went all the way up to 1,000, and look at this type of dip. This is something to really mental prepare yourself for, and understand that, look, you can go from 100 thinking you were going on top of the world to be at 1,000 something, over 1,000, and then come right back down to earth within a period of what, 2 months. You're back down to 500. Now you're thinking, oh, that's a big swing, so if somebody who bought it this time is probably crying down here, and this whole market just goes sideways. This sideways market is pretty normal. Like, if you think about the market psychology, you have the up and you have the down and you have the sideways, and it kind of repeats itself, right? This is normal until this was 2014, I was telling you, where Mt. Gox got hacked. It was a main trading platform, and from this point forward, basically, any momentum that Bitcoin had just died. People lost faith. People lost money. People that were invested, basically the people that weren't mining and were just trading because they invested their money into it, lost it. Not only do they lost it, they're no longer encouraged to want to keep trading. So people were scared for the safety of the structure, the infrastructures. So there was a dead period from 2014. I'm just going to fast forward all the way until late 2015, and look, you can see here there's some life coming back here. So this is after a 2-year span. It goes back up to maybe 400. I mean, there was a couple of times where it probably hit 400 around the middle. So you're hovering in this pretty much sideways or bear market for 2.5 years or 2 years, where traders were able to make some money because of the volatility between 2 and maybe 500. To the general public, this is a dead market. So nobody was talking about Bitcoin at this time. I wasn't in it. My friend that was mining stopped mining. So during this time, it almost like the skepticism that I had was proven right. But I still loved the ideology behind it. So I never stopped keeping tabs on it. And this was when you see a little bit more life happening. One of my other friends, not the miner, but another friend who was a traditional stock and real estate investor, he started looking into blockchain technology because of Ethereum. So late 2016 to early 2017, really exciting. This is when Ethereum was coming out with the smart contracts, and different projects were coming out, getting some hype from the different industries they were trying to disrupt. It was actually pretty mind-opening type ideas and projects they were going after. And along with that, there was a bunch of other projects that probably didn't belong, the so-called shitcoins in this market, which we will touch on along with pump and dumps. Those are all things of caution before you even consider investing. Once you get to know those things, along with this, the main point I'm trying to drive home here is when you look at the history, you can take a look at the type of price pumps going upwards and the ratio of bear market and correction you can mentally expect. One of the main tips to remember is that we should never chase old highs. It's something that I've had to learn the hard way. There's many trades while in the up market and during this phase here where you're expecting the big jumps day after day, and it's just when you hit a different type of market, you have to change up your strategy. So make sure you don't get caught up in the emotional moves. Remember the chart we were looking at, all the different emotions you can feel. At the same time, when you look at history, you can take a look at the possible ratios. It doesn't always have to be the same price points. We're not going to see these numbers again after a few years. So it's going to be different numbers, probably larger numbers, but in terms of the ratio and percentages and what you can kind of expect, this is a good way to mentally prepare yourself. As far as how it's going to go in the future, it's hard to predict for anyone. But what I can say is with more volume that comes in, the chances of the price volatility being this drastic is going to slow down. So as far as these type of moves, we may not see this as often as we continue forward and the price keeps going up and we have more volume in the markets overall. This is just something that I'm always going to encourage you to come back and do some research, do some more digging. Whatever coin you're looking at, it doesn't have to be just Bitcoin, but Bitcoin is a thing that you're going to make most of your decisions based off of, because most of the market will follow it. So that's just the major tips to remember for now. So when should you get in the market? Simple answer: buy low, sell high. So get in when it's low. Now, this is much easier said than done, right? But now that you have a pretty good look from the big picture and a glance through history, it should be a little bit better now and easier to get a feel for where you are currently, regardless of when you're watching this. So is it a bull market right now, or is it a bear market? Has there been a recent parabolic move, or is it dead for the last few months with nothing going on for a little while? What does the news sound like? Maybe consider doing the opposite. These are just some things to keep in mind, and I will have more content and more information to help you through this. Make sure to like and subscribe. It's going to help me a lot. It will motivate me. It will mean so much for you guys to keep supporting me, give me more questions to feed off of, more tips you guys are looking for. I will do my best to give it all to you.